I'm Ellis Martin. Welcome back to South Florida's Money Talk Radio. Today, an exclusive interview with my friend Brien Lundin. With a career spanning 4 decades in the investment markets, Brien Lundin serves as president and CEO of Jefferson Financial, a highly regarded producer of investment-oriented events and publisher of investment newsletters and special reports. Under the Jefferson Financial umbrella, Mr. Lundin serves as publisher and editor of Gold Newsletter, the publication that has been the cornerstone of precious metals advisories since 1971, and is the host of the annual New Orleans Investment Conference, the oldest and most respected investment event of its kind. As editor of Gold Newsletter, Mr. Lundin covers not only resource stocks, but also the entire world of investing, from small caps of every type to macroeconomics and geopolitical issues that ultimately affect every investor. As host of the New Orleans Investment Conference, Mr. Lundin has annually brought the giants of investing, economics, and geopolitics together in intimate presentations with many of today's most sophisticated private investors. In all of these endeavors, Mr. Lundin has striven to burnish the brilliant legacy of the late James Blanchard III, his great friend and the founder of both Gold Newsletter and the New Orleans Investment Conference. Brien, thank you so much for joining me today on the program. It's a real pleasure to have you on.
Ellis, it's a big pleasure for me as well. It's about time we did this.
You've been in the business a very long time. The New Orleans Investment Conference is 47 years old. Is that right?
No, it's our 50th year this year, 5th anniversary. Now, I have only been involved with it, I guess, 38, 39 years at this point, a relative newcomer to it. But yeah, I've been in this business an awful long time. I'm reminded of it every morning when I look in the mirror. So thank you for reminding me of that further today. So I appreciate that.
If our audience could see you right now, they'd see this, and I say this in the most bro-to-bro heterosexual way. You're a very handsome man. You age well. Let's focus on the Gold Newsletter and the gold sector right now, which you and I both love. We can't help ourselves. We're not leaving it. We're not walking away from it. I'm all stocked up in physical gold right now. It's not a huge amount, and that has done very well for me. Whereas my investment in the equities over the last couple of years has not so much. There's gold bugs who are waiting for opportunities in the market like exist right now. The bottom of the bottom, we've never seen such a disparity between the commodities and the equities, and now it's definitely time to buy. Is it safe to do so yet? And if you have a generalist hat on, why wouldn't you look at other things like AI or biotech, interactive learning or tech or anything as opposed to gold and silver specifically?
We could talk for an hour just on that topic alone. And I think one way to look at it is, why are we interested in it? Why are we, in some cases, obsessed with it? Because it's a lot of fun. There's a certain romance to discovery of a treasure hunt by getting involved with these companies. Each company is a story of a group of people, often very talented individuals, scientists in many cases, geologists, and business people, and sometimes wearing all the same hats, but really dynamic entrepreneurial people chasing a dream, and they invite you to come along with them and chase that same dream. And we have participated in markets where we've seen the kind of wealth that can be created by this. When there's an underlying bull market in gold, these junior mining stocks benefit from that. And we see cases where the worst performer in your portfolio may only double in price because the rising tide is lifting all boats, as opposed to maybe going down 80% in price has been the experience of the biggest losers in our portfolios over the last few years. And then on top of that, you have companies that go up 3, 4, 5 times, the occasional 10-bagger, and then some absolutely spectacular companies that go up 20, 30 times or more. And when you have that over a period of years, when the gains from these successes get rolled over into other similarly performing stocks, then wealth gets built up very rapidly and to a very great degree. So that part's good. Now today, after a long bear market in the mining sector, but a pretty interesting bull market in gold, why aren't other people, why aren't generalists involved in it or really interested in flocking to it like they did in the early 2000s? There's a number of reasons for that. One of the primary ones that I talk to people a lot about is that markets don't care what the price of an asset is. They care where the price is going. And gold, for all of its gains and its ability to gain from bottom to top $400 during the harshest Fed hiking cycle ever seen, those gains weren't in a steady, consistent uptrend. You had big sell-offs. You had a lot of range trading. And despite the fact that we generally rose over a couple of years, we didn't have the kind of a consistent uptrend that gets people excited, that gets people flocking to a market. Another piece of this, and I think it's obvious, is the competition. You mentioned it. You have crypto, you have Bitcoin, you have the Magnificent Seven or whatever magnificent it's down to, 3 or 4, whatever now. You have AI, NVIDIA, and you have all the stuff that's going great gangbusters right now. And so we have this competition for speculative money. In addition to all of this, we haven't made it easy for generalist investors and U.S. investors to get involved in the sector. Over the long bear market, we've seen the regulatory authorities make it increasingly difficult for U.S. investors to participate in private placements in junior mining stocks. And we haven't seen much in the way of trying to build the market by the sector. We do a lot of that in Gold Newsletter with New Orleans Investment Conference, but I think it needs to be done on a broader and grander scale to get people involved in this sector. We just haven't had that yet. So it's a mixed bag, but I do believe that once we get a consistent uptrend, which as we speak, I think we're working on it now and we're tracing out that kind of pattern right now, I think it will begin to capture the public's imagination. And again, I think it's happening right now.
There's so many questions I could ask you related to the in-depth commentary that you just gave me. I'm going to start with this one. You mentioned the regulatory issues that exist. I'm thinking primarily Canada, where a lot of these mining companies are based. What about opening up some of these companies here in the U.S. and dealing with the OTC and ultimately NASDAQ or the New York Stock Exchange? Is there a way to expand into the U.S. that we haven't done yet? Many of these Canadian companies have U.S. symbols, but still Canadian companies, and a lot of the brokerage houses won't touch them. Plus, the market is a 10x here compared to Canada.
Yeah, it is, but it's not 10x in terms of regulation and the kinds of regulation you need to really safeguard investors. Canada, the Canadian exchanges, particularly the old Vancouver Exchange, was renowned as a den of thieves decades ago. In truth, it was, but that's all evolved. And the Toronto Exchange, the Toronto Venture Exchange, the regulatory authorities have seen every manner of scam related to resource investing perpetrated on the unsuspecting public. So they have been able to regulate against every manner of scam. The U.S. authorities, it's just Wild West. There are too many companies on the OTC and the like for the SEC to regulate. And those regulations really don't address the kind of risk-taking, speculative environment that's necessary for junior mining stocks. They don't really address resource estimations, qualified personnel, et cetera, reporting requirements that are necessary to not only regulate and making a trading venue safer, but also make it appropriate for speculation, where companies know what the rules are, they can follow the rules, and reporting is in a way that is clear, and everybody knows how to read the reports, et cetera. In fact, I tell my readers and the attendees at my conferences that if a junior mining company is only listed on the OTC and not listed in Canada, that's a decision that they made, and they made that for a reason, almost assuredly to avoid the kind of regulation that you get in Canada. So Canadian resource investing in those markets, those exchanges, is the safest in the world for resource investing. We do see some companies going on to NASDAQ and the old Amex-NYSE because those minimum market caps and other standards have dropped a bit and made it possible. But not every junior company that represents a good opportunity is yet able to get onto those exchanges. So I think that those companies that are on those exchanges are great opportunities. Some of them are small enough to offer the kind of upside and discovery potential you want to see, but just a small fraction is yet of the available universe of companies and opportunities.
Has the TSX, has the Toronto Stock Exchange, has the Canadian Venture Exchange got rid of all the charlatans, or are there still a few around?
It's made up of humans. The market is of people. So yes, there's going to be charlatans around, and they're going to try to get away with it. And even those that are doing things according to the regulations and following the rules, there's still a spectrum of people who are trying to dance along the line, get away from a little bit here and there. And then there are groups that play it completely straight and are very successful and have their reputations at risk in the market and value their reputations more than just another buck. It is a wide spectrum. It's a market where you really have to educate yourself to be successful in it. But the good news is because of that, because it's an inefficient market, you can find opportunities that other people don't. You can outwork other people. You can sometimes just have the plain good old luck to stumble across something that is just a warning very early in a company's evolution and development. And you can realize outsized returns because you can get these things cheaper before anyone else. A little bit of brain power, skull sweat, a little bit of money, subscribing to the best newsletters and going to the best conferences. And you can be very successful in this market, especially again, in a market where a rising tide is lifting all boats. And that's precisely the kind of market that I think we're getting into, the kind that we saw in the 2000s that lasted 11 years and built really fortunes. I think we're getting into that kind of environment right now.
I imagine after all these years, your radar is really good compared to many investors out there, compared to most actually, just by the nature of how much time you've spent in the sector. Not necessarily running companies, although I know you do consult, but just as a barometer and somebody who's been with this gold newsletter forever. So what are you finding right now? And are you making these investments?
Yeah. I swore off making any new investments for about the last 6 months or so because I was literally fully invested in the sector with no more capital that I thought deemed it prudent to devote to the sector because it already put an awful lot. All of my risk portfolio was devoted into these junior mining companies, but it's been hard not to because given my longstanding experience, I can recognize extremes of the market cycle. We have been in one of those extremes where extraordinarily valuable companies were selling for small fractions of what they would sell for, even in a normal market, not even a buoyant bull market environment, just a normal market. A lot of companies would be selling. In particular, I'm talking about companies that have already established resources, that have already found something of significance. They've been able to either publish a resource or even publish economics in a resource. And they have been trading at about a quarter to a fifth of where they would be trading in a normalized market environment. So there's been lots of opportunities. The trick in this case is finding the best of the best, which I've been trying to do. Now, all of that said, in the last couple of months, I have taken some profits in that little uranium run that we had and created a little bit more cash. And after this recent spate of conferences in Vancouver and Toronto, I found some more opportunities that I could not resist and am redeploying those profits into the sector again. But I think the market's turning. I think that this is our last opportunity to do so, trying to take advantage of that.
I imagine at this point, I'd want to be on your shoulder when you're making these purchases. How much information do you give to your audience for the Gold newsletter?
All of it. I'm old school in that respect. I may be the only old school one left. A lot of newsletters, and not to fault them, it's all a business model. A lot of newsletters write and say, this is what I'm buying right now. In other words, this is what I've already bought and may be buying right now, and I'm telling you about right now. In my case, if I'm buying in the market, I have to recommend it in both my alert service and my newsletter and give my readers a few days to take advantage of that before I can actually go out and buy in the market. My logic being that if I find something that's worth buying right now in the market, then it's something that I should be telling my readers about because they pay me and I'm working for them. That said, I do invest in private placements, which are outside the market. My buying obviously would not have any effect on the share price. And frankly, in the market, it wouldn't have much of an effect on the share price. It's just a matter of principle. But I do participate in private placements for a number of companies. I don't always recommend those companies that I invest in because in a lot of cases, I'm taking a risk that I don't think is appropriate for a group of people that I don't know personally. And in some cases, it's a brand or associates company that needs a stronger financing. And I'm not necessarily doing it purely for investment reasons, but to help them out. Obviously, the hope of some return. My private placements that I do, not all of them end up getting recommended in the newsletter. And I tell companies when I'm investing in them through these private placements that there is no guarantee that they would be recommended in the newsletter. The end result is that our portfolio is public for readers, for subscribers. And in that portfolio, you can see which companies I own and which ones I don't. It's just a fairly extensive portfolio, and I'm not capable of buying every company that I recommend. And in some cases, my policy works against me, and then I recommend a company and it rises too much too quickly over a period of time before I can invest in it.
Are you a patient investor?
Too patient. I'm a great buyer If I have a weakness, it's in selling because I, like a lot of people in the sector, I fall in love with a story. And frankly, I'm not a big trader because I'm very busy trying to find new opportunities for my readers, run a company, run a conference. So I don't get a lot of times I'm not able to act as quickly as I want to sell companies, but we do that in the newsletter. We do tell people when to hold a company, which means anybody can sell it. You can sell it. I can sell it. If it's a buy, and I can't sell that company, if it's a buy in our portfolio, if it goes to a hold, then I leave it up to the individual subscriber to decide whether to take profits or cut it loose. And in some cases, we cease coverage for companies because we have to keep the portfolio of a manageable size. And occasionally we just find what we think are going to be faster horses to put in the stable.
I'm curious as to the magic number of what's manageable. I could take a guess, but I won't.
Too many, frankly. And I don't recommend that for individual investors, but this is my day job. So I am talking to companies all day, virtually every day, trying to find opportunities, getting updates on what's going on. And so it's easier for me to manage a portfolio of tens of companies in it, but it's probably not recommended for individual investors to have more companies in their portfolio than they can possibly spend maybe an hour getting updated on a month. So it depends on how much time you want to be in it, dedicate to it. I doubt that there's many individual investors who have anything else going on in their lives that can focus on as many companies as I do.
This is a segue into a completely different conversation right now. I'm wondering, what are your thoughts on lithium at the moment?
Most of these metals and minerals and resources go through multi-year bull markets and bear markets. Lithium seems to go through one every couple of months. It gets ahead of itself and falls back. And right now, it's come back awful lot from its highs. I think it's probably going to settle out over the long term, a bit higher than it is now, but not at those extreme levels, and still enough for good mining companies to make a market in it. I am more interested, frankly, in some of the other battery metals. One of the ones that is perhaps the one that has the most powerful supply-demand story is copper. It's a bit more boring, but we are facing severe supply constraints. We're going into an annual supply deficit over the next year, and that would be based just on the base case, just historic and current uses for copper. If you add on the whole electrification story on top of that, it just gets insane. The amount of copper that will be needed, not just for electric motors, but also the grid to deliver that power. And that's where another big constraint is coming in, is just being able to deliver the power where it's needed to charge up all of these electric cars and all of these batteries. Copper is the one metal that you can't get around. There's no known way to engineer around copper. You can alter, and are people, scientists altering the components of a lithium battery and other batteries. And don't really sure what's going to happen there, but they can emphasize or de-emphasize various metals that go into battery technology. They really can't engineer around copper. And it is facing, because of that, probably the steepest demand curve of any commodity that we've ever seen. And again, that's with severe supply constraints. Supplies that cannot keep up with that demand curve anywhere near current prices because there has not been enough invested over the last 10, 15 years in exploration and finding new copper deposits and developing them. Plus a lot of political considerations. Some of the largest copper deposits in the world today have not been able to be developed for political reasons. They may never be developed. So the prognosis for copper prices is, in my view, at least a doubling over the next few years. And some have postulated that it's going to multiply 3, even 4 times in price.
A few months ago, during the winter months last year, just for the heck of it, I put out a segment claiming that, and I have no reasons to do this, I certainly don't follow the sector as tightly as you do. I'm more of a pontificating journalist and a listener to other people talk. I predicted $5 copper and 2,500 gold within a year, this year. I just felt like saying it. I think if enough of us just keep saying that over and over again, we'll make it happen. Copper and gold can actually run at the same time in this market, can't they?
Yeah, absolutely. And for 2 different reasons. I tell people that there are 2 fundamentally bullish stories, two of the most bullish, most compelling stories in resources that we've ever seen that are operating in parallel. They are separate and distinct, but equally compelling. There's the monetary story for gold and silver. And then there is the more general commodity story, but more specifically battery metals and electric metals story being copper, lithium, cobalt, nickel, et cetera, all of which have placed or have experienced supply constraints and are experiencing severe demand curves, upward demand curve. So they are two distinct stories. And I think that's just a world of opportunity. And because you have copper and gold occurring in the same deposits, quite often, many investments can take advantage of both of those stories at the same time.
I think we're going to see more copper companies add a gold asset and vice versa right now.
Yeah, and sometimes they don't need to because their primary asset has copper or gold, and often in these big porphyries to such an extent where the main economic contributor switches back and forth between copper and gold.
They used to run contrary to each other, but I think as we've discussed, they can actually happen at the same time.
Yeah.
As you said, for completely different reasons. Your New Orleans investment conference that happens every year in the fall. Let's talk about that.
This conference was started by a guy named Jim Blanchard, who in the early 70s was successful in getting gold legalized for American citizens. It was illegal to own gold back then. And he got it legalized through a lot of various lobbying and protest efforts that he did and for a publication he created called Gold Newsletter. He was successful in getting it legalized in 1974 and decided to have an investment conference to teach Americans how to invest in gold, this illegal substance that they weren't allowed to invest in before. And it was a great success. And over the years, he expanded it to cover all asset classes, but it's always had the central theme of personal liberty, sound money, freedom, free minds, free markets. And we've hewn very closely to that over the years. Jim passed away in 1999, and I took over the reins. I've been running it since and trying to burnish that legacy. We are famous for having some of the finest speakers, most insightful speakers, some giants of recent history speak at our event. We've had Margaret Thatcher, Ayn Rand in her last public appearance, Milton Friedman, Alan Greenspan, the list goes on and on. And lately, we've been having some of the more brilliant commentators on the macroeconomic scene that you'll see on financial Twitter/X and social media and the like. People who don't parrot the mainstream view and really have insights that I think have extraordinary value in an age, in a time where extraordinary things are happening. None of what we're seeing today is normal by any stretch of the imagination. It's nothing that's been experienced in the U.S., at least for decades. And we're going to get more of it in the years ahead. So I've been bringing in speakers who can explain that and give you arguments for various commodities, various asset classes, various outcomes of what lies ahead. And so far, they have been remarkably prescient. We have predicted really over the decades of our conference, every major event in the financial markets. And not only that, we have shown investors how to protect themselves from what may lie ahead. The result of all of this really is that we have about 500 or so of the top investors, self-made men and women, maverick investors who direct their own investments and are information hungry. They do their own research. They don't believe just what's parroted to them by mainstream financial media. So we have a great group of attendees. We have a wonderful roster of experts, and we have an exhibit hall packed full of the kinds of opportunities we've been talking about. Junior mining companies that have very good stories to tell and want to tell it to our audience. And again, it's all in New Orleans. So it's a wonderful environment. It's a lot of fun, and it's intellectually stimulating to a degree that I don't think you'll see anywhere else.
I can't argue with that. And I think it's also curated by yourself. You don't take everybody, do you?
No, I don't. It's easy for me to say these are the best speakers you'll find anywhere because they are my favorite commentators out there, and I pick every one of them. So it is a dream job for somebody like me who really respects and enjoys these kinds of opinions from very smart, again, very insightful people. And I get to pick the ones that I feel are the best in the world. I've got a little bit of experience doing that. I've read everyone and everything and watched everything in the markets for decades. And I know who has a real value to share. And I get those people to speak.
You feel like making any predictions for the next year or two?
I don't like to give both a price and a time frame. I can give you one or the other, but I do think that your estimation of $5 copper and $100 gold is very achievable. We've seen many times, or at least a number of times over the past few decades, that gold has gone up 20 to 25% in a year. And if we're talking about that, then we're going to be well over $2,500 for gold if we go up anywhere near that. If we go up 20%, we'll be in the $2,600, $2,700 range. So that's easy to see. We've seen a lot of excitement in copper in recent days, and that's also easy to see, especially if we have any kind of economic recovery in China to advance that kind of narrative about copper over the next year. Yeah, I think this is going to be an extraordinary year for the metals, primarily for gold and really for silver as well. Silver is a natural option on gold. It naturally offers leverage to the gold price, and I think it will once again outperform gold over the coming year.
Brien, it was a real pleasure to catch up with you and do this interview, our first in all the time that we've known each other. Please do come back on the program a few times before the conference in the fall.
I would love to, Ellis. It's been way too long and a great conversation. I look forward to having many more.
I've been speaking with Brien Lundin, publisher and editor of Gold Newsletter and host of the New Orleans Investment Conference, an event you should not miss. There are two websites for you to go to right now: goldnewsletter.com and neworleansconference.com. That's goldnewsletter.com and neworleansconference.com. Wow, that was a lot of information. Want to hear it again? Tune in tomorrow and get on our email digital audio distribution list. Sign up easily by going to ellismartin.com. That's ellismartin.com. We'll send you every interview as soon as it's ready. ellismartin.com. Do you want to speak with me personally? I'll take your call, 561-388-5084. That's 561-388-5084. Until soon, I'm Ellis Martin, and this has been Money Talk Radio South Florida.